bit of a weak looking screen. So that's what's going on with the markets. But let's kickstart the show now with a corporate conversation. TeamLease Services posted a weak set of Q3 results. So their revenue growth moderated significantly. In fact, we also had festive demand for general staffing, which came under pressure this time around. So Chief Financial Officer of the company, Ramani Dathi, joins us now to take some questions. Thanks a lot for joining us, Ramani, and to discuss all of your numbers. Like I said, your revenue growth has moderated to around 14%. I think last year we saw closer to 35%. And for the 9 months that we have of FY23 so far, it's around 25. Can you tell us what it's really looking like for this quarter, that is for Q4? And what do you think you could end the full year with? That's FY23?
Sure. On a full year basis, we are still confident of maintaining a top line growth of between 20 to 25%. So definitely we'll be falling short compared to the last year growth, because last year post-COVID, we have seen a surge in the demand and overall hiring. So we may not be able to replicate the similar 30% growth kind of trend, but 20-25% is something that we are confident of maintaining for this year as well. As you rightly mentioned, the Q3 festive demand is little disappointing and also surprising, because typically if we look at our last 15-20 years of track record, Q3 gives us the highest contribution in terms of headcount addition on the back of the festive season in India, which this year is a little disappointing, and it's lower than the numbers that we have added in Q2 and Q1 of this year. But having said that, the Q4 numbers are looking bright. So we are confident of closing this year with, as I said, 20 to 25% growth overall.
Can we talk a bit about Q4, Ramani? And morning, this is Rima here. On IT, in Q3, your revenues were flat quarter on quarter, and year on year, revenue growth was about 3.6%. In Q4, for specialized staffing, should we expect a Q on Q decline in Q4, or will there be at least some growth, even if it is in low single digits?
Yeah. On a sequential basis, Q4, we are expecting a single digit growth, Rima. And on a full year basis, we are not expecting any major growth on a year-on-year basis. Because, I mean, whatever the current market trend in IT has hit our IT staffing business big time. However, sequentially, we are seeing some green shoots, and we are confident of slightly posting a higher growth in Q4 compared to Q3.
So low single digits kind of quarter-on-quarter revenue growth in IT services in Q4, right?
That's right.
Okay, yeah. And what about general staffing? Will there be a pickup in the hiring and revenues on a quarter-on-quarter basis in Q4? And will that also be a 0 to 5% type of growth?
Yes, it would be 0 to 5% sequential growth.
Okay.
I mean, while we don't have the full year visibility as of now yet, but definitely Q4 is looking to be better than Q3, the previous quarter.
Got it.
So yeah, that would take us our overall growth to 25%.
Okay, that is on the revenue and the margin. But coming to the margins, actually, I think you did mention earlier that your margins are likely to be under pressure in the coming quarters as well. For Q3, we saw around 1.58%. Can you tell us what you expect here going forward? And is this softness likely to continue as well?
Yeah, the softness in margins will continue, because the costs have gone up. Salary inflation of our associate employees is very high, still very high. And we initially thought we can close the year with a slightly higher profit percentage compared to last year, but more or less we'll end up with the same profits as last year. So the margin pressures are still continuing, and we would expect that to continue for another 1 or 2 quarters as well.
But will it hold at these levels, or you expect it to move lower further from this around 1.6 as well that you have? Is this the worst of it?
We may come around 1.5, 1.6 in that range, plus minus. And because, again, the salary inflation is something which is not in our control. So that determines a lot of our margin percentage variance.
Ramani, just can you explain a little bit more about this National Employability Enhancement Mission, NEEM program, which has been discontinued effective 23rd December. What did it do? What exactly was it? What was TeamLease's contribution in it? And now that this program is discontinued, what will be the impact? Just give us some background as well about this program.
Sure. So between our general staffing business and apprenticeship business, all put together, we have close to 3 lakh employees/trainees, out of which we currently have 26,000 trainees who are under this NEEM program. And this program has been withdrawn in the first week of January, and by way of notification, and without any kind of clarity on what would happen to the existing trainees who are undergoing on-the-job training under this program. So, I mean, we are working with the government agencies, and fortunately last week there is a stay order that we received from Delhi court saying that for existing employees, since we cannot immediately terminate their apprenticeship program, there is an interim stay order. So ideally what would happen is these 26,000 trainees should be transitioned to either Apprenticeship Act or the general staffing model, the contract employing model. But that would have a temporary impact on our revenues as well as profits, because the transition time will take at least 1 or 2 quarters. But in the interim, if we have to release these 26,000 trainees, that will directly hit our bottom line. So that's why we are indicating softness on our profits for next 2 quarters as well.
And would you be able to sort of put some sort of a ballpark range to that? What could this impact be as it plays out over the next 2 quarters?
The range could be anywhere between 4 to 5 crore per quarter is our estimate. But again, it is subject to how many numbers we can manage to transition to other buckets of either staffing or Apprenticeship Act.
You said that if you had to immediately release the 26,000 trainees who are still a part of that NEEM program and on your payroll, it will have an impact. What exactly do you mean by release?
Yeah. Since the scheme has been discontinued, so we have to terminate the apprenticeship programs of these 26,000 people. Currently, we are earning roughly about 500 rupees as an average realization on these trainees. And on that 500 rupees, we make a profit and EBITDA margin of roughly about 30%, 30-35%. So that's a straightaway bottom line hit to us. So that's what we are referring to as a margin impact in the coming quarters.
Just a final question on the HR services business. You did say that there was some sort of a delay in university billings, which is impacting the EdTech side of things. Can you please elaborate and tell us exactly what the status quo is?
Yeah. So under our HR service businesses, one of our main business vertical is EdTech, wherein we do billing to the universities for providing online platform for the curriculum for distance education students. So typically the billing starts from academic year, which is around September onwards. So Q3 and Q4 is where we do the revenue billings. However, this time there is some sort of delay with some universities in terms of getting the approvals on time. We have started the billing from Jan onwards. So we are confident of maintaining on a full year basis. We are confident of maintaining a 40-45% revenue growth with an EBITDA margin of 8% under this EdTech business. So it's only a delay. So we are not expecting any kind of drop in our estimated revenues or profits for this vertical.
Ramani, we'll leave it at that. Thank you very much for joining in. So that's TeamLease guiding for some improvement in Q4, both on the IT hiring and the general staffing. Quarter on quarter, we should see some improvement in Q4, though the improvement will be to the tune of low single digits. But margins will continue to remain under pressure for the next 1 or 2 quarters. It could hover around the same levels as Q3. Q3 margins were 1.6%, but Ramani indicated that it could even be 1.5 to, I think, 1.6% kind of EBITDA margins. And for the full year, though, given the strong growth that we've seen in the first half, they will still end the year with a 20 to 25% top-line growth. But things have considerably slowed down in Q3 compared to their expectations, and this weakness in festive demand actually came in as a big surprise to them.
The stock has also been under pressure, right, over the past year or so.
Absolutely. I think factoring in the slowness in IT hiring and this festive demand weakness. Get into a break. We'll discuss commodities on the other side.